Welcome back to Investing and Trading Live, sponsored by Trading Academy, talking about the do's and the don'ts of the financial markets. That's the stock market, options, futures, forex, cryptocurrency, whatever your soup du jour is. We talk about that on the show, and hopefully helping our financial family make smarter investing decisions. We have investing classes to really help people make smarter investing decisions all across the metro area. We do these here at a local academy in Bloomington. We got a state-of-the-art facility, a couple different classrooms. Matter of fact, we have 3 different classrooms where we do these classes. And we also have locations across the metro, Maple Grove, Edina. Where else are we? We're at Woodbury, Wayzata, just different areas to help people make smarter investing decisions. But it gets started with a little bit of knowledge and how concepts are in the markets. Simply to come into one of these classes, just text the word investing, and that's going to be to the number 210-210. So text investing to the number 210-210. When you do that, you're going to get a text right back, and there's going to be a link to our landing page in that text. So when you hit that link, it'll bring you to our landing page with all of our dates and locations, so we can pick a spot which is closer to you, but also that works on your schedule. We have these classes during the week. We also have them on the weekend, so pretty much anybody can attend. So just text the word investing to the number 210-210. Also, we appreciate and love our subscribers on the podcast. We are going to make this the #1 global podcast in the financial industry. That's Investing and Trading Live, wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. So Al, as we've been doing the show here, we've been covering different topics and different vehicles on the markets as far as how you can utilize your time for flexibility, but also your capital for flexibility and your money as well, because you shouldn't put all of your money in the market at one time. Unfortunately, that's what everybody does, because they're putting all of their money in stocks or in mutual funds, and then they hope it goes up. Well, the problem with that is when you have drawdowns in the market, you lose 100%, and when you have gains in the market, you have a little small gain. Now, there's different ways to approach that. We talked about in the last segment using leverage. So what that means is, let's just say you have a $100,000 account. You may only tie up $5,000 of it, or maybe $10,000 of it, and it'll act like the same amount of money. So that's being efficient with your capital, is using the leverage property. And the thing is, too, is everybody uses leverage in their everyday life. They just don't really realize it. And that same concept you can utilize in the markets, too, because that's how you should do it to have more efficiency with every dollar that you have. Now, we talked about the futures market in comparison to the stock market in the last segment, a little bit about the options market, but also the comparisons between income accounts and retirement accounts. So on this segment here, since we've covered kind of the general concept of different types of accounts, trading versus investing, I want you to talk about what that actually looks like, because, and I think we did this a little bit last week as far as what it looks like as a trader or investor, but when someone is making placing an investment or a trade, it's all on a platform which is on a computer. And it's all sophisticated where it does it automatically for you. Just explain that process to show how actually, quote unquote, how actually easy it is to place those trades.
Yeah, the trading platforms today are not only sophisticated, but relatively simple in the way that you use them. And we actually show people how to use a trading platform before you even come into a class. We go through a little session with you, show you how to set it up, how to use it. But things have gotten to the point where if you follow the right strategy that gives you the opportunity to identify when to get into something, it's identifying the right price. If you can identify the right price, that also gives you the ability to have a quality risk management strategy in place and also a maximum profit strategy in place. And those are all dependent on getting in at the right price. Once you've identified the right price, it's just a matter of, on your trading platform, putting that price in. How many shares do you want? What price? You hit a buy button and you're in the trade. We would show you how to set that up, by the way. So in addition to entering a position, say you're buying something, you automatically are already set with your protection in place. So if you're wrong, you're automatically out with a small loss. But if you're right, and this is just as important, you're out with the full profit potential. The mistakes that most people make is, number one, they don't know how to get out if they're wrong. And number two, they don't know how to get out if they're right. They either take a profit too soon or hold on too late, and they watch it dissipate. I can guarantee you, if you know somebody who does a lot of trading, They will tell you that they have had several situations where they've had a really nice profit, but they ended up losing it all. And by the way, we use the word traders and investors. There really is a difference, and there's a difference in the way you approach the market for income and for wealth. If you're looking for income, that is something you need to achieve on a short-term basis. That's trading. You're trading an asset. You get into it, you get out of it in a relatively short period of time, hopefully with a profit.
Well, the term trade actually means an open and a close is what it really.
That's exactly right.
Term.
Yeah, and a long-term investor is typically having an open position that they leave open for years, maybe 10, 20, 30 years. You're looking at putting money into something that you hope in the future will be there. The problem is you can't control what happens between now and whatever that future is. If you're trading, if you're looking at being more short-term in the market, you have an opportunity to react more beneficially to what's happening in these markets. You can't control what other countries are going to do. You can't control what our government's going to do. So the impact on your long-term portfolio is pretty much out of your control. So we'd like to have a little more control over what we're doing. That's what most of our students are looking for. But most advisors are only really addressing one part of those two components, the income and the wealth component. Basically, most advisors, in fact, a lot of them now won't even work with you unless you have a certain amount of money, maybe $250,000, maybe $500,000. What they're assuming is you've already created some wealth, and then they'll maybe give you some ideas on what to do with that wealth. But for a lot of people, they're not there yet, or the wealth that they have built up, they're using that now to live on because the income or the inflation has gotten so high. The cost of living is really going up. And it's just created a lot of stress for people. So we always talk about income as being probably the most important component. You use it while you're still working, while you're in your accumulation phase. But when you're in retirement, as I mentioned, I think in that last segment, you have to replace the income from your job with something else. And instead of drawing down your retirement accounts, use it as an income-generating vehicle. That's why it's so important to learn what those strategies are first.
Yeah. No, with the markets the way they are right now, just tremendous opportunities that it's showing us every single day. And, we get some people that think the market is going to continue to go up, which is a possibility, right?
Absolutely.
And we get some people that think the market's just going to go straight down at one point, and that's a possibility as well. How can somebody prepare for both?
Well, that's really key. You need to be prepared for both. So you need to know what the opportunities are, what the best strategies and the best assets are to help you to generate returns when the market's going up. But then conversely, when it goes down, how do you benefit in a down market? What are the strategies you can use? And there are a number of things that you can do to benefit in a down market or a sideways market. The market goes three directions. And for most people, I would say probably 90% of the people listening to the show, you are only benefiting in one of those directions. That's an up market. The market does not always go up. Whether it continues to go up now or not, at some point in the future, you're going to have a drawdown. That's the way the market has always functioned. Sometimes drawdowns are necessary to create more of a real true value for the markets and for individual assets. So you can't control that happening, but you can control how you respond to it. So you just need to be prepared. A plan that you have, a trading plan, which we help our students put together, should have the strategies built into it, or at least identified in it, that have you putting you in a position where, regardless of what the market's doing, you know what you're going to do. You don't want to be in a position where you go, oh, what do I do now? I'm not prepared.
Yep, and let me just tell you what Al just explained. It basically doesn't matter which way the market goes.
That's correct.
It's really the fact of the matter, because when you do have a strategy for an up market, it's a possibility. Matter of fact, it is going to go up at one point. And if you have a strategy for a down market, that's a possibility. Matter of fact, it is going to go down at one point. Then you have strategies for all directions. Then you have your best possible odd in doing and reaching whatever financial goal that you have. If your odds are only 1 out of 3 directions, well, think about how actually good that actually is. It's not very good. Now, what if you had odds in 3 out of 3 directions? Now the tables have turned. Now you're trading like an institution, like a bank, not against them. Now you have strategies for both directions, and then you can really, what I feel is the most important piece, is sleep better at night. And that's why we have these investing classes here at the Academy, to show you those concepts, up markets, down markets, how to have strategies for both. Simply just text the word investing to the number 210-210. And that's for 2 seats, one for you and one for a friend. Text investing to the number 210-210 for our investing class right here in Bloomington or anywhere in the metro where we have other locations. Also subscribe to the podcast if you just do miss part of the show. Investing and Trading Live wherever you listen to your podcast. We've had a lot of tips and tricks here today. Markets are doing great right now. A nice holiday weekend here. What is today's OTA tip of the week?
Well, when it comes to your financial life, if you don't act, someone's acting for you. And who do you think is going to benefit in that scenario? You have to take control. It's the only way to protect yourself from what's happening in this world. Just look at how quickly things have changed in the last few years. Taking control now is really imperative before you reach a point where you won't be able to take control. No one can go back and make a new beginning, but anyone can go forward and make a new ending.
I like that. Change can be good. Change can be bad. It's how you are prepared for change, but also how you react to that change. And it can be positive or negative. Hopefully we can inspire you in a positive way to make smart investing decisions, planning ahead for everything, and being prepared for any situation. As always, protect your losses, collect your profits, same time, same place week. Until then, retire young, my friends.